Well, 20 years ago this month, the first euro banknotes and coins found their way into European wallets. The launch of the single currency meant one central bank was now responsible for the monetary policy of hundreds of millions of the continent's citizens. Although the euro has established itself as the second strongest in the world since, it still has its ups and downs. Sibel Karkush reports from Berlin.
It marked not just the turn of the year, but also the biggest monetary switch in history. Millions of Europeans queued at ATMs on New Year's Eve 2001 to get hold of the first euro banknotes.
I have withdrawn 50 euro and sincerely, I don't know what it equals in French francs, but I'm going to spend them for the first time in Madrid.
The next few months saw the first 12 nations that joined the Eurozone shredding their francs, liras and marks, making way for the single currency, which promised to ease travel and trade restrictions and strengthen the integrity of the European Union. But the initial euphoria didn't last long. To this day, many Germans blame the introduction of the euro for a spike in prices, although official statistics say otherwise.
With 100 marks, you had a full shopping trolley, and now with 100 euros, not even 2 bags.
Some predicted that a monetary union between a dozen different economies, all doing business using one currency and offering the same interest rate, was a recipe for disaster, making weaker economies a burden on stronger ones. Which is exactly what happened in 2009 during the global financial crisis, when Greece and a handful of poorer nations were unable to pay their debts and at risk of defaulting. A massive bailout package saved both the indebted nations as well as the euro itself from collapse. But 10 years on, the currency union is once again burdened with debts. The German government is deep in the red. That's after the EU took on joint borrowing for the first time ever last year to weather the economic blow of the COVID-19 pandemic. But although its debt pile is set to grow even further this year, economists don't see the euro being at risk. Officials actually credit the euro for helping the EU avoid an economic catastrophe during the pandemic.
In particular, the way we all work together to deal with the economic consequences of the pandemic of COVID-19 demonstrated that by sharing the euro, we can achieve more collectively than we can individually.
Today, 19 of the 27 countries in the European Union have adopted the euro, making it the second most used currency globally. But with the use of cashless payments on the rise, competition from cryptocurrencies and record-breaking inflation, the euro might not be in second place for long. Sibel Karkush, TRT World, Berlin.